Good morning. This is the video newsletter for Buy Sell Short for Sunday, October 23rd. We're starting off with the Dow daily chart today. Very nice breakout on the Dow on Friday. Big up day. Granted, it was on the back of a handful of stocks, and most of the market really was just a snooze fest. Options expiration didn't hurt matters either, but we have finally broken that resistance, and this uptrend that I said was in place 3 weeks ago continues to dumbfound the bears and the shorts in this market. We are climbing this wall of worry, and our next magnet right now is that 200-day moving average at 11,965, essentially 12K. Very unlikely that we don't try and test this level over the next few days. We have a lot of big things coming this week. The nonsense in Europe continues. We had some news out today with them agreeing in Europe to force banks to raise more cash, which is what has been expected. We still have no deal with Germany and France. They're going to be meeting again on Wednesday. So we're going to have that same old intraday back and forth nonsense that we've been dealing with really over the summer, but especially over the last week, where the headlines come out and say there's a Europe deal, the market rallies. They come out and say there's no deal, the market sells off. And essentially what happens is we slowly move higher through those rumor-mongering news events. There's a stat under the articles on the website I posted, but essentially it says that 11% move we had on the S&P 500 over 5 days, that has happened 16 times since 1950. Why do I bring it up? Of those 16 times, one time the market went red into year-end. That was in 2001. It also happened in 2002. The market was break even. The 14 other times that it's happened, the market has had a nice year-end rally. So, something I've been hearing a lot on message boards and, on Twitterville, etc., is that the move we saw in the market is not something you see in a bull market. And, I will continue to go back to my saying that what we saw this summer was an anomaly that, we can essentially just draw a line through. We're just rebuilding that stupidity we saw. When you look back at what has happened really since April of this year, we had the Japanese tsunami and disaster that really impacted global manufacturing, and we're just now starting to get back into full steam again. We had the European debt crisis make another appearance, and then we had the teabagger fiasco with the debt ceiling and corresponding S&P downgrade. Very, very big events. And, even with all that crap, the economy has still managed to keep its head above water. We're starting to see sales come back in. The economic data, given all that doom and gloom out there, has not been that bad. Granted, there's still no jobs out there, of course. But we're starting to get some positive data reads out there right now. And, as I've been saying over the last several weeks, once this European nonsense gets put to bed, off to the races we go. Let's take a look at a one-year chart on the Dow. You can clearly see here we are now back in a nice little uptrend. Obvious magnet is to the 200-day moving average. And again, I believe we are going to retest the highs, barring Europe sinking into the sea. Possibly by year-end, more than likely early next year, we'll be pushing on new highs. RSI looks great. The bears and the shorts, we've got short interest as of last month at 5-year highs, and you still see them out there saying that this rally is fake and we're going to retrace. We've got some very nice supports even if we do see pullbacks. We've got the 20-day exponential at 11,377. We've got the 50-day moving average just below that at 11,250. So if we do see stupid sell-offs on any sort of European news, I'd be very surprised if we don't see very, very strong support come in there. So, it continues to be a market to buy on dips and just ride this trend higher. We're still in the large cap mode of this rally. We are seeing pockets of strength in some small caps. And actually, let's take a quick look at the Russell. The Russell back at the teabagger top was up there at 860. We're 20% lower here right now. Even though the market, is in a nice little recovery here, we still got small caps trading around the bottom, and they got decimated in this sell-off. These will be our leaders going into next year. RSI has been very nice and stable over the last couple of weeks. Stochastics is up there in the nosebleed level, but again, like the Dow, we've got nice moving average support down below, and we're still about 5% below a breakout here, and very nice upside. These are the stocks, and these are the stocks we trade that are going to do very, very well over the next 6 months, in my opinion. Quick mention on the 15-minute chart. As you can see, the rectangle formation, we again broke out to the upside. Looks really, really good. Taking a quick look here, we are looking at getting a positive MACD cross on the 15-minute chart, and I like seeing that going into Monday mornings. Typically means we see a pop. Of course, it's going to depend on what the spin is out of Europe overnight, whether the news, which should be construed as positive, is spun positive by the fools who trade the futures markets. SMH, right up there to its 200-day moving average, so that's going to be the next little breakout area. I would be looking to buy around the 20-day exponential on any market-related dips, so that's around 29.32 to 29.50 is where I'd be looking to pick up a scalp position on any dip. Anyways, let's jump into some stock plays. ANX, I like the setup here. I think this one goes this week. We've got a bio conference on Tuesday and Wednesday, bio investor conference. Typically, at least during the summer, these conferences and events really didn't have much impact. But this market has changed, and traders are looking for an excuse to buy stocks. These guys, along with CYCC, are a couple of biotechs presenting this week. I really like the chart. As the email I sent out on Friday, 109 is our breakout. I would be looking to add there for a move to 125 to 150. RSI consolidating nicely. I like seeing stochastics go up, down, and then try to make another rebound effort here. This one goes, it'll probably go on big volume, probably be news related, or a volume spike over 750 to a million shares, and then off to the races. Remember, this company is sitting on $1.50 in cash with no debt, and after the run we had on our other cash-rich biotech stock, NSPH, this one's up 40% now over the last 2 weeks. Remember when we were saying that to accumulate this one, 95 cents to $1, almost up to $1.40, 40% gain. All we're looking for here is 15 to 25% on ANX. Same situation. Let's get back to its cash position as its market cap, and we could see that happen this week. CYTR, cash-rich biotech stock. I continue to accumulate this one. We had a nice move over the last week. We've got some backfilling now on the chart, which is fine. I continue to accumulate this one. Target, there's no reason going into year-end that we can't get a 50 to 100% move on this stock, especially with the news flow that is expected to come in November and December. So, this is one I don't mind sitting on and waiting for the big payday, just like we got on our CYCC that ended up giving us over a 50% move. The other cash-rich play, TNGN, 20-day exponential is probably where we're going to see a breakout. That is at 53 cents. Cash-rich bio, decent bottom in place now. Need I say more? HEB, this is another cash-rich bio. Very low cash burn, only 2 million cash burn a quarter. They've got enough cash to last them a long time. And breakout here is the 50-day moving average, 30 cents. The key here, as I mentioned in the email, positive MACD cross on Friday. The last positive MACD cross we saw on actually the last couple, it happened back in mid-August, and then we also saw it happen in mid to late June. In June, the stock popped, we ended up going from 38 to 50 cents, nice 20% move. Back in August, it went from 26 cents to 36 cents, 40% move. Here we are sitting at 28 cents. Hey, why not another move up to that 36 to 40 cent level on the positive MACD cross? Stochastics look great. Risk reward, very, very attractive. And then, we're buying a stock with lots of cash, a biotech stock. Typically, these biotech stocks trade at multiples of cash, not at discounts to their cash. New play we picked up on Friday, and actually one we've played quite a bit. Actually, let me annotate this chart. Magellan Petroleum. This is one we picked up some shares, 106 to 108 on Friday. CEO had a letter out here. This is a company, oil company, that has lots of assets. They've got 50+ million in cash. Their market cap is 52 million for an oil play with no debt and the assets they have. Ridiculous valuation, especially given the moves we've seen. Now it looks like there's a short on this stock, and that could be the fuel for a very nice move upward. Our target here is the 50-day moving average at 135. And remember, when this market started selling off, this stock went from $1.70 all the way down here to $1. With the market in rebound mode, this one should have a nice little run. And if you look at the chart, same thing happened in August. The stock lost, 75 cents over the course of 2 weeks and then ended up rebounding almost all the way back. So that's what we're looking for here. Very nice risk reward on this one, as I mentioned in the email. THQI finally broke out, got a break through that 202 level. We picked some up. Sent out the alert on this one. Gamer stocks have been very, very hot. And with this breakout and the rule of two, which we haven't had a rule of two play now in quite some time, target here, 220 plus, depending on the volume that comes in here and a possible run into earnings. All the indicators, very, very strong. RSI, ADX, stochastics looking really, really good. This one should see a nice pop tomorrow. 210, 15 area, 220, and then, if volume really starts to move into it, we could see similar action that we saw on COOL and GLUU over the last couple of weeks. So the volume's starting to come into this one here, and we could be in store for a very nice Monday on this one. TSEM, Tower Semiconductor, we got a break through the 50-day moving average, 71 cents. We're looking for 80 and 90 cents here. RSI looks good. Beaten down semiconductor play with the semis on fire right now. Should be a nice little bouncer play, especially with money coming into these under $1 stocks. This one looks very, very good for a nice move this week. FCEL, this is one we played quite a bit. Unwatched right now for break. You got a couple of choices. We've got the recent high of 105 to do a buy trigger, or a break through the 107, the 50-day moving average. Either or, if you jump in on the break there, target is going to be $1.20, 15 to 20% high, or well, from now, if you pick it up, 15 to 20%. If you wait for those breaks, you're looking at 10, 15% upside. But a very nice chart setup. Definitely one to keep a very close eye on this week. This 105, 106 area, I believe, is going to bring in some big volume. So keep an eye on it and definitely put a price alert for this stock. Quick mention on YHOO, a lot of rumors, buyout rumors floating around on this one. Now Google has been mentioned as a possible financier of any buyout in this stock. If you're looking to play this one, I was actually checking it out. The long-term options actually aren't that badly priced. YHOO April 2012 calls, $21 calls, $22 calls are trading from 28 cents to 36 cents. And, YHOO, if it gets a break through that $19 level, really could see a nice little move higher. So if you're looking to gamble a little on a long-term call on YHOO, might be worth checking those out. So that's it for the video tonight. If you've got any questions, feel free to send me an email. Otherwise, I will see you guys in the chat room tomorrow. Goodbye.